Hi traders, you're welcome back to the Forex Geek channel. If you are new here, I'm glad to have you, okay? In this video, we're just going to be diving into something that's really powerful in technical analysis, and that is the Elliott Wave triangle pattern, okay? Now, whether you are a seasoned trader or just starting out, understanding these patterns can significantly sharpen your trading strategy, okay? Now, before we get started, make sure you hit that like button and subscribe to the channel. If you are serious about mastering the markets, you don't want to miss out on the upcoming videos, okay? Let's just get into it. First off, what exactly are Elliott Wave triangle patterns? You might be asking. Now, these patterns are key elements in the Elliott Wave theory, okay? They typically appear during a consolidation. It's mostly during consolidations that you will find these patterns. All right, consolidation is a period where, let me just show you real quick. Yeah, consolidation is a period where the market is taking a pause. You can see something like this, when the market is taking a pause or building momentum before the next big move. You can see that here we had a significant bearish move, and then we had a pause, right? We had a sideways movement before a breakout now occurred to the downside, and shortly afterward we still had another upward breakout, right? But basically, consolidation period is a period of indecision, right? A period where the bulls and bears are kind of struggling to take direction, or rather to take dominance of the market, right? So when we're talking about triangles in Elliott Wave theory, they usually form in wave 4 or wave B of a larger impulse or corrective move. Now, what's interesting about triangles is that they indicate market indecision, where buyers and sellers are kind of at a stalemate. But once the triangle completes, there's usually a significant price movement that follows. Now, there are a few different types of Elliott Wave triangle patterns, that you need to know. All right. These are usually broken down into 5 main types. Okay. Now we have the symmetrical triangle. This is the most common triangle pattern, right? This is the most common triangle pattern, and it is what you see most often. In fact, let's just go to the chart, and we're going to find a symmetrical triangle shortly. Yeah, because it's one of the most common patterns. So I am sure that we are going to find one. I'm sure that we're going to find one. Let's just see if we can find one within a minute. Within a minute. Let me just go to a higher time frame. Let's see if we can find one within a minute. Okay. Can see what's happening here, right? I can decide to even use, okay, no, this is not exactly it. Yeah, this is not exactly it, because we're not supposed to have wicks dropping below. Okay, I think we have one here. All right, here we go. You can see this. You can see I connected the highs, and now I'm going to connect the lows as well. Can you see that? So can you see symmetrical triangle pattern is a common pattern that usually occurs. All right. Now the trend lines that form the triangle converge toward each other, and the price fluctuates within them. So it's important to know that symmetrical triangles typically precede the breakout, and it's crucial to wait for confirmation after the breakout happens. Then the next triangle we're going to be talking about is the ascending triangle. The ascending triangle pattern. Now, the ascending triangle pattern, you will see a flat top, right? You're going to see a flat top and an upward sloping bottom. You're going to see a flat top and an upward sloping bottom. Okay? A flat top and an upward sloping bottom. Now, I think we have something like that here. We have something like that here, and you can see the upward sloping bottom and the flat top. All right. Now, this usually signals that the market is building up to an upward move. So buyers are pushing the price higher, and the resistance at the top is being tested repeatedly. Okay. Now, the next pattern is the descending triangle pattern. The descending triangle pattern. Now, the descending triangle pattern is just the opposite. Here, the lower trend line slopes, here the lower trend line slopes downwards, and the upper trend line is, the lower trend line is flat, right? The lower trend line is flat and the upper trend line slopes downward. Okay, slopes down because it's called descending. The ascending is just like in this example, this is an ascending. Then descending, you're going to have a support below. In descending, you're going to have a support below, and you're going to have the price coming down. So that we'll call a descending pattern. Okay, it's typically seen as bearish, signaling that sellers are in control, and a breakout is often expected. Okay, now we also have the expanding triangles. This pattern is actually less common. The expanding triangles is less common, but still important to recognize. Okay, in expanding triangles, the price moves in outward direction, as you can see, outward direction, making a series of higher highs and lower lows. Now, this type of triangles suggest increased volatility, and the breakout can happen in either direction. Then finally, we have broadening triangles. Okay, broadening triangles, they are similar to expanding triangles, right? But they tend to have more erratic price action. The lines can spread out significantly as the market becomes more volatile. So trading these patterns can be tricky, but if you manage to spot them, they can lead to some big moves. Okay, now that we know the different types of triangle patterns, let's just talk about how to spot them. Okay, spotting Elliott Wave triangle patterns requires a keen eye, and practice is key. The first thing to look for is that the price action will start to tighten. The market will enter a phase where the highs and lows begin to converge, and the swings become smaller and smaller. This tells you that the market is losing momentum and preparing for a breakout. Next, you want to make sure that the pattern forms within a larger trend. All right, let the pattern form within a larger trend. Okay, because triangles are typically appear as part of a larger correction or consolidation. So if you're looking at a bullish trend and you see a triangle, it could be a sign that the market is preparing for a continuation of the trend once the pattern completes. Conversely, if you are in a downtrend, a triangle might signal that the market is preparing for a bearish continuation. Remember, patience is critical when trading triangles. You don't want to jump in too early, thinking that the breakout will happen immediately. Wait for the price to break out of the triangle and show confirmation in the form of volume and price movement. Okay, so once you have spotted the triangle pattern, how do you trade it? The most important thing to remember is that you want to wait for the breakout. Okay, wait for the breakout. The breakout is where the real trading opportunity lies. But it's not just about breaking the trend line. The breakout needs to be accompanied by strong volume to confirm that the pattern is valid. So in line with that, you can actually decide to add the volume indicator. And then when you notice a breakout followed by a spike in volume, that could be a signal to enter a trade. One thing to remember is that you want to set your stop loss just outside the pattern. Okay, depending on which direction the breakout happens, this helps protect you from a false breakout, okay, where the price may quickly reverse. Also, your profit target should be based on the height of the triangle. Measure the height of the triangle at its widest point and then project that distance from the breakout point. Okay, this gives you a rough idea of where the price could go after the breakout. All right, now to sum it up, Elliott Wave triangle patterns are powerful tools in any trader's arsenal. Recognizing these patterns and trading them with the right strategy can give you a huge advantage in the market. As always, don't forget to manage your risk, and remember that not every triangle pattern will break out as expected. Practice and patience are key. Okay, If you enjoyed this video and found the information helpful, make sure to hit that like button and subscribe to the channel for more trading tips. I look forward to seeing you in the next video. Happy trading.